Hello traders, the title of the video is Overbought CCI Trader discusses Overbought CCI trading mistakes. Alright, so we are on a monthly chart and we are analyzing Giant Technology Incorporated Epic Alpha. Alright, here we are. So what is happening here, you can see that the CCI period 14 is well overbought, very overbought. And a lot of traders, as always, so it's in the zone of, right now it's in the zone of 169. It went up to 231. So traders very often, CCI traders will say that when it reaches 200 level, or above 200 level, one must sell. But okay, sometime one can sell, sometime okay, one does not have to sell it. So talking about expert CCI trader, which myself, I consider myself as expert CCI trader. You may disagree, and I'll say to you, that's my opinion about myself. All right. So should one sell here? The only time what is happening here, you can see that people are selling. You can see the shadow last month. I'm on the monthly chart. People sold it here a bit, you see. Even here, it got a tail. So people are just forcing the price down. Say, you must come down. The CCI is now in the zone of 200. The price must come down, and the price is going up. Right, so you see them. People are selling here. They are selling. Okay, but this is what we are talking about. Now, I have the discussion with a trader. All right, so about other things, and the question that comes into my mind is this: what is more important? Is it the entry of the trade, or is it the exit of the trade? So I'm just bringing this forward. Is it the entry of the trade that is more important, or is it the exit of the trade? I think the entry is very important. The entry is very important. How you enter the trade, it will determine how long you're going to be in the trade, even to consider exiting the trade. Have you ever entered a trade, and by the time you turn around, you look on your screen, you say, where is this trade? And it's no more on the screen. It's gone. So the timing, the market timing is more important than anything else. So exiting the trade is also market timing at the time when one is about to exit the trade. But if you do not enter the trade properly, so the entry is like the foundation of the trade. All right, so now you are engaged in the trade. You make the decision to take that trade. So any losing trade that follow that trade is because of your decision to take that trade. If you did not take that trade, all right, you won't be thinking, you won't be counting your losses. So there could be a lot of disagreement about that. So this is what's happening here. So people are just selling now. So they are not timing the market. They are not timing it. So the CCI is overbought, telling us that the price is at a resistance level. So we want to know which resistance the price is pointing to us. So the price here is going up, is going up. So what do we say to traders? We say to traders that the price does not go up for no reason. All right, it's always headed to a specific target level. All right, so it's a market principle. So some traders that are trading this Giant technology will measure the depth of this round bottom here, and they will set a target somewhere there. This is something, if you are TSTWSY0A trader, or if you want to become a TSTWSY0 trader, you need to have a bit of experience, all right? you have to know at least how to enter the trade and how to set the stop loss, because in the document of the TSCWSY008, I didn't spend time to tell traders how they exit the trade, because I consider that as a personal issue. The risk tolerance of one trader is different from the risk tolerance of another trader. So I see trading system try to tell trader how to exit the trade. So there is a signal to tell you to exit it. It's about how you to set stop loss. So this is not about exiting the trade. So the system will tell you when you can exit the trade. All right, but this is about how you set your stop loss. All right. So if you want to be part of the TSTWS008 trading system, try to have more experience, master how to set stop loss, because the system will not help you to set your stop loss. You will have to set your own stop loss. So I'm just bringing this out in a public place, all right? So you see here, so the price does not go out for no reason. There's a specific target that is headed to. All right, here it is. There's a target there. And there is a midpoint target. So we are at a midpoint target level. How do I know? Yes, because understand that market principle, and I go into the mind of other traders. There is another target. There are many ways that traders set targets. So other traders will measure, for instance, the length of this price move, the length of this price move, and they will project it here. There is an ultimate target up there, and there is a midpoint target. You see in this zone, somewhere in this zone. So that's why some people took profit there. And also, there is another way to set the target. This one here. Okay, the magnitude of this price move from here after this pullback. So from the top, from the high to the low. And some traders will put it on top like this. Ultimate target somewhere there, midpoint target in the middle somewhere here. Other trader will put it here. All right. But right now we are watching this one using the depth of this cap here. We are at the midpoint target. The CCI is overbought. The mistake that traders are making is about what? Market timing, the timing. So people are selling. Some will be lucky, selling at the correct time. And if you time the market correctly, you will not have to use the biggest stop loss. This is it. Did you time the market correctly? Use a different time frame trading method to time the market correctly. So all we see here is that the price at a resistance level, it can come down. All right, it can come down. But if it breaks above that resistance level of 81.02, breaks above, retests a final support, it can continue to go up. But the CCI is turning around here, pointing to us that the momentum is diminishing, the bullish momentum is diminishing at a resistance level, which is normal. When you are driving, when you are approaching an obstacle, do you keep up the momentum? You slow down. That's what the CCI is doing here. So the CCI has identified a wall, so to speak, a barrier, which is a resistance, the midpoint target at 81.02. The CCI, like a car, will slow down. A car can come near an obstacle, slow down, go around the obstacle, and then speed up again. That's what we call bullish breakout. The price sometimes will do that. It may slow down. So the CCI is slowing down. The price may also slow down a bit. People will think that it's going to come down more. Just a slow down, and then it will speed up, which will be a breakout. The overbought does not mean that the price will definitely come down. Look at that. Here it is. It was overbought here in this zone at 199. The price slowed down, acknowledging the resistance zone, all right? And then from there, after slowing down, it goes around the obstacle and then starts speeding up again, you see? Though the CCI was well overbought, and you see here, it was slowing down again, the CCI was slowing down again, and then again, it speed up again. Am I talking too much today? What? So to handle this, we must use different time frame trading methods. So now we have identified the resistance that the CCI is pointing to us that is based on a market, a principle. All right? So what I was saying to you about the entry, the exit, in fact, I was thinking about setting stop loss. All right, setting stop loss. I don't recommend setting stop loss to traders. When you are trading, you are new. You need to learn. I can assure you, no one taught me how to set the stop loss. I learned it myself, and I posted a video at the 24 Stock Trader YouTube channel about how I set my stop loss. There is a video about that. How I set my stop loss. It's better for a trader, even a baby trader, to go through the motion to learn to set stop loss. Okay? Very, very important. Very, very important. Because if you do not know it and learn it yourself, and that won't be good for you as a long-term trader. Okay? All right, here we are. So we are here. So now we drop down from the monthly chart to the daily chart, you see. Okay. So what are the 6 biggest trading mistakes? We talk about this all the time. People say, Joe, you're talking about that all the time. Yes. See, so on the daily chart, the common center line on this side is broken. Oops, where are we? It's not easy to draw this one because it forms an arc over here. So you see, the project went a bit round. So if you want to draw, you have to draw it like this. Very close to the price like this. That's it. That's a beautiful common center line. You see, along the price. That's the line here. Sometimes this is something that you will come across, right? The price will break the common center line. You see here, it break it. And then also, he retested the common center line. So there are sellers selling here after this common center line is broken. All right? But you see, the candlestick bar is very long. The candlestick bar here is very long. All right? But now, more experienced trader may enter the trade at the top here, dropping down again to the hourly time frame. They can break it down again, hourly time frame, and then 10-minute time frame to enter the trade at the very edge of that blue trend line there. Other traders that do not have that experience may have to wait for this candlestick bar to close. But because this candlestick bar is very long, professional, we want a bit of bounce up. This is it. So there are some traders showed it here, because they think that this candlestick bar is very long. You see, they are happy to sell it here. But look, after they showed it, which is a good thing to do, look, the price turns around again and then goes up again. So this is what we are talking about. Price is at the resistance level. Price will slow down. The momentum will slow down, acknowledging the resistance. Like a car can slow down on approaching an obstacle. It does not mean that the car will definitely stop. So you drive and you see a pedestrian crossing the road, you slow down. It doesn't mean that you're going to stop in the middle of the road. You just slow down. Yeah, because there's an obstacle, everybody knows that you're going to slow down. You must slow down. And then again, you speed up again. Yes or no? So sometimes the price will do like this, and then the next thing, the price continue to go up. And everybody say, oh, what's going on here? What's going on? Just keep eyes on the price. That's it. So in fact, after people saw it here, the price say, no. So now, how do you set your stop loss here? It's down to you. It's down to you. Sometimes they will say 10 people above this candlestick bar here. Now, the question is, can you afford that stop loss? So if you are telling people stop loss should be there, can they afford it? Depending on their trading account, can those traders afford it? You see? So they are saying, you're telling me to play the stop loss. So you are here now, you are settling. Suppose you are here. All right? And this common sense is broken, blah, blah, blah. You test it here, and you are selling here. your stop loss should be 10 pips above this one here. But now, can you afford that stop loss? Not everybody can afford that. Now, you're giving advice to people to do something that they cannot afford to do. That advice becomes completely useless to those people. So, the question is, what's the better for? So now you see, now it's going to a triangle. So that's why sometimes people will set stop loss in a different way, which I talked about before, how I set my stop loss. That video is on YouTube by 24 Stock Trader. I'm not going to go through the same thing because trader did ask me that question 100 times. Sometimes they may take you out. Sometimes you do not have to use, the normal stop loss. You may only decide to use half of the normal stop because you think that it's a bit tricky. If they take you out, that will be a big loss. So you may decide to use half of the stop loss. If they take you out, again, you use again the other half of the normal stop loss that normally you should have used at the first place. Now, a stop loss is a market order that is visible to other traders. Sometimes we do not want to tell traders, reveal quickly what we are trying to do, our stop loss, what we are trying to do. So that's why sometimes some professional traders will move their stop loss. So people say you shouldn't move your stop loss, but sometimes professionals move their stop loss because they do not want to reveal straight away where their stop loss is. So as they try to take them out, they move their stop loss again, making it more difficult for those people that try to take them out. So they say, where are those? So they say, stop are there. Or the stop are there. Everybody can see the stop are there. They place their stop loss. They know. People know that if somebody is selling here, should place their stop loss above this one. And sometimes they will be taken out of the trade fast before the price will come down because they know that where are the stops. You see, it's a game of, is it cat and rice, a cat and mouse, or or cat and chickens, whichever you call it. So you see, sometimes one can enter the trade again, which is normal, but look at this, you went back again, up again, which is, if the signal fail, close the trade and come back again. So now it's coming out of this triangle now, you see. So here it is, So people will try to sell it here and place their stop loss above the triangle here. Now, can you afford that? Do you have enough funds to fund that stop loss? You see? Now people are selling. If this is it. It's a triangle because this one is a price due to come down, all right? Instead of going down straight away, it's going up and down. Here you see it came down. So break below that common straight line, retest it, find a resistance. People sold it here. Those who are smarter traders sold it here. Other traders sold it here. All right, because of this tendency bar that is long. Now, some traders who were not here, missed this opportunity to sell it here, may now monitor the reaction of the price and wait, probably they are selling here. Now, again, you enter the trade, all right? Doesn't mean that it's all finished. You need to keep eyes on it. Now, it can start coming down a bit, or it may just turn around and go up. Signal fail, come out. Just come out. So if you are looking for trading method or trading strategy that will work 100%, it doesn't exist. It does not exist. It doesn't exist. I will not lie to you. It doesn't exist. All right. Or if you are looking for trading robots that will do all the hard lifting for you, you don't have anything to play. It doesn't exist because what the banks are doing, the trading system, the trading robots are working for the banks, but there are people monitoring the performance of the robot. The robots are taking the trade very fast, many trades, but there are people monitoring the market environment. And if they see that the market environment has changed, they will shut it down. So here it is. So you can see now on the hourly time frame, we see a consolidation going on here in that triangle, blah, blah, blah. And here it is. So you see, it breaks below, you see the triangle on the hourly time frame. Now instead of just going out gently and retest the edge of the lower part of the triangle, and so people can set it here down, the price gap up. Can you see a gap? It gap up. Again, see? Because there are people trying to buy above that midpoint target because they know that there's another target. So the midpoint target that I showed you before on the monthly chart is the pink line here. So some traders who understand that are buying above that midpoint target. You see here they are buying near the midpoint target here, right here. All right, that's why the price gap up here, because the trader understood the consolidation that was taking place here above the midpoint target. So now they were selling at the top here. All right, here it is. So those who sold it now here after this common straight line is broken and now in this trade, some of them will take profit here because it's a consolidation play on the hourly time frame. Now it's dipping below, okay, that midpoint target. All right. So if you are not yet in this trade, you can wait again until the price exhibits, okay, a new lower low. So this is you may have to wait. So price going down, okay, in March form, okay, lower lows and lower high. All right. So another entry point will consist of the price displaying a new lower low, followed by, okay, a lower high on the edge. All right, meaning that display a lower low, rallying up, and a common straight line is broken, and I implement a top-down trading method to sell it down. Okay, we have been talking for 21 minutes. That's enough. I say now. So it's not sufficient to see the CCI being above 100 or being above 200, even being above 300, and then one just go and sell it. It's a big mistake. So talking about expert CCI trader discusses overbought CCI trading mistake. This is it. So it's a setup in place. So in fact, this is a specific stock CCI setup. I don't want to dwell on that again. I am an expert CCI trader and I recognize it. And we are talking about it now. Now the question is, all right, what is more important? Is it the timing? Is it the entry or is it the exit? In my view, I think the entry is more important than the exit. If you enter correctly, you have a strong foundation. You come in the market correctly, you enter correctly. So the entry is also consists of, apart from the timing, also to manage the risk, which is how do you set your stop loss? Usually, if you time the market correctly, you hide your stop loss behind the first and nearest resistance level, or behind you place your stop loss that you can afford. So it's just it. Can you afford that stop loss? So I may say to somebody now, if you sell here, place your stop loss 200 pip up. Other trader may turn around and say, George, are you out of your mind? You want me to set my stop loss 200 pip up? Okay, I say 100 pips. Another trader may say, that's too much for me. I don't use 100 pips for swing trading. I prefer 50 pips. Now, the stop loss for 50 pips may work for one financial instrument and maybe not work for another financial instrument, depending on the characteristic of the financial instrument that you are trading. So now it becomes bigger and bigger and bigger and bigger. So if, for instance, all right, you are trading, all right, you are trading, just understand that gradually you learn to set stop loss and you find out for yourself what is working for you, depending on the financial instrument that you are trading and also depending on your own risk tolerance. Is it the entry or is it the exit more important? Now, the first thing is the most important thing, all right, before the second one. Because if you haven't succeeded the first step, all right, if you don't know arithmetic, you can't do algebra, isn't it? So you have to know the first one first, all right, before you move to the next step. So I think the entry is more important because if you do not enter the trade properly, you don't have even a chance to think of exiting the trade because they will take you out before you even think of exiting that trade because you are not even in the trade yet. So the entry is more important. Now, how do you set your stop loss? Well, The correct answer is up to you. Can you afford it? All right. High your bearish stop loss behind. Okay. A resistance, a high your bullish stop behind a solid support level. So this will conclude our discussion today about expert CCI trader discusses overbought CCI trading mistake. Do not sell because the CCI is overbought. Trade the price, you see. So after we have acknowledged here the CCI going down in overbought zone, now we zoom into the price to see what is happening. So we may time the market correctly and make the correct decision instead of just selling it. Understand that though the CCI is overbought, even if you sell it, sometimes signal to fail and the price can continue to go up. If you are trading a CCI, try to combine it with a market principle. It's not by mistake that the price is stopping at the level of 8102. It's because there's a midpoint target there and the ultimate target is at 8789. That's why on the hourly time frame you can see that it was finding a support near the median line, and there are traders out there that want to push it to that level of 8789. All right. If you have any questions, suggestions, lament, or I put in the comment section, and of course I will be recording another video to answer your specific question. If this video has been helpful to you, give us the thumbs up. If you dislike it, mark it down. You say, Joe, you're talking about stop loss, exit, blah, blah, blah. All right, mark it down. All right. However, if you think this is an essential tutorial that can help other CCI traders, feel free to share with your friend on Google+, Twitter, Facebook, and Tumblr. Subscribe to our YouTube channel. Our YouTube channel is Day Pro Traders. Be sure to click on the notification bell so anytime we record a new video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about expert CCI trader discusses overbought CCI trading mistake. Happy trading to you all, and I will speak to you soon.